We're recording. All right. So, first of all, I want to welcome everyone and thank you for participating in this live section. I really appreciate you giving out your time to be here. All right. So, I would not waste any of your time. I would try and start answering the questions as much as I can. Let me just share my screen so, in case we need to, do any stuff on, you know, the trading section. So, first, if you have any question you would like to ask, signify by raising up your hand so I would pick you all randomly, okay? All right. Mm-hmm. All right, Melo, you're up. How are you doing, bro?
I'm doing great. And you?
I'm okay, bro. I'm okay.
Okay.
So we have let's say 5 minutes for each, participant who gets to give their question. So I could attend to others too. So what's your question,
Okay.
bro?
Okay. Thank you very much for the PDF. It really helps a lot. But please, on breaker blocks, you didn't add a visual representation like a live chart showing how to trade breaker blocks. But you explained really well. I would just like if you can show us a little bit of like a live
Okay.
chart where you use
So
breaker blocks.
okay, let me give you a quick example of what a breaker block is. Okay, when picking a breaker block, you have to understand two things. Okay, have two things in your mind. First of all, a breaker block mitigation is a temporal mitigation. Okay, so
Yes.
should in case you want to swing a breaker block, it should probably be a higher time frame breaker block. Okay, so a breaker block
Yes.
is always an inducement to the other block above it. So if you're picking a breaker block, understand it's an inducement. All right, you're trying to trade off an inducement. Okay, so you might get stopped out along the way, and you might not. It's a two-way probability stuff. Okay, so
Yes.
one sec, let me just do something real quick. Okay. So once you want to trade from a breaker block, once you have that understanding, you should know that this should be kind of like a pattern. You know the SMC, pattern, right? The
Yes.
manipulation and then the break of structure. Okay. So once this is done, you don't want to pick a breaker block from here. Breaker block is not supposed to be here. A breaker block is supposed to be, let's say, this. Like I said in the PGFI, is a failed order block, right? Another block
Yes.
that
Field
failed
order
to
block.
hold. So if you want to pick another block, if you were supposed to pick another block from this, let's say this was supposed to be a trade, wasn't this supposed to be the mitigation, right?
Hmm.
So
Right.
it failed. So if this is another block which failed, that means the breaker block has to be within this zone, right?
Hmm.
So that's why you see most of the breaker block that hold, that traders do post, usually look like this. So you see the inducement, the fair value gap within it, and the breaker block at the 50% of the fair value gap. So this is a space between, you know, the demand zone above it, sorry, and then the inducement below it. So this right here is inducing this breaker block. All right, not this demand zone. This demand zone has not been induced. All right, an inducement is not supposed to be 30 pips away from the POI. So if in case you're picking a POI, let's say this is a daily chart, you pick your POI, your inducement around here, and your POI is here, and this is like 70 to 50 pips away from it. That's the wrong POI. This has not been induced. Who does a manipulation of 50 pips? Nobody. Nobody has that much money, to manipulate the market against the official direction. So this is inducing this POI. So your inducement is supposed to be close to your POI. So if you want to pick an inducement, pick the POI closest to that, inducement. Look at this. This would be inducing something close to this, which will get reacted from. But that doesn't mean it is inducing this POI. Okay? So this
Hmm.
inducement you see right here was inducing the breaker block. So if you want to pick a breaker block, it should be within this zone. So this becomes, your mitigation. So now this becomes an inducement for the other block within this POI. Okay, so you see the fair value gap left within it because this was the imbalance which was filled, and then now you have the fair value gap above your other block. So now this other block becomes valid because you have your strong high, the manipulation, the
Yeah.
inducement, and the fair value gap. So you see sometimes a breaker block might not hold to take out this low. Okay, it might return and then do something like this. Then this becomes a new trend.
I
Okay,
get. I
so
get.
sometimes it might take out the low and then return to this. Okay, so if you're picking a mitigation from a breaker block as a POI, you should understand that most of the times those are inducements. Okay, so let
Okay.
me show you an example on the live chart. Now look at this. This was a manipulation, right?
Yeah.
Okay, so this broke structure, took out the low. So if we were to have a POI, it should be around here, right? So you
Right.
see this POI failed to hold, so it was broken. Okay, so if you want to pick a breaker block, it should be around this zone. Now this is a flip zone. Okay, this is a flip zone. And then if you watch the price action from within this zone, you'll see this took out the highs, but mainly this created a flip zone. You see this supply, this demand over here was flipped into a supply, right? So this was a
Right.
flip zone, which the breaker block is presented over here. So this becomes a significant watch zone. But then if you go out on the higher time frame, like I said, what do you see? You see the pattern?
Mm-hmm.
You see that, right?
Yes.
It came into this, not this right here. So you see, your breaker block is supposed to be over here, and now you see this becomes. Let me delete all this so it looks more audible. So now this becomes the fair value gap, which is inducing this demand zone. Okay,
Okay. I
so
could see
that's how you're
now.
supposed to pick your um breaker block and all. So you could do more research on that, but this is the main pattern for a breaker block. Manipulation, break of structure, returning back. A breaker block is around here. Okay, this is supposed to be the breaker, not this. So the first rule of picking a breaker block, it should have an inducement below it, which was written in the PDF file. And
Mm-hmm.
most of the time, it's best if it's coming from a fair value gap, okay, or an imbalance, like an imbalance and stuff like that.
Okay.
Okay, so
Okay.
let me answer the next person. Okay,
Okay. Thank you very much.
I appreciate it. Subas, you're allowed to speak. What's your question, bro? Hello, are you there? Okay, so let's just mute him and pick someone else. Bro, your name is complicated, but um, M the guy, you're allowed to speak. Are you there? You could unmute your microphone now.
Good afternoon, bro.
Yeah, good afternoon, bro. How are you doing?
I'm good. Thanks, and thanks for this opportunity. Now,
Yeah.
without wasting time, what I want to ask is, when price get to your POI, like a 4-hour POI, what is the best lower time frame to wait for a coach? Then, secondary, you know, there will be a situation when there will be a coach, and if you look, you will see something. You see something like demand on supply, as in there will be two. Like if you are planning to sell, then you will see a two supply zone, the one below and the one above. I don't know which one is the best to choose. If you have this kind of two supply zone that are closer to each other, which one
Okay.
is
Let me
good?
let me let me explain this as fast as I can using structure. Okay, because structure is key. So let me explain this as fast as I can using structure. Now, what I always tell my guys in the mentorship community is that if you're looking at structure, structure moves like this, right? So if this is the forward time frame, you understand that lower structure would be like this. You basically asked two questions. The first one was where do you look for, a change of character, and the second one was what would you do if you have two POIs resting, you know, above or in your area of focus. So this is what I would do. I would try to understand the structure, okay, which is mainly like this. This is how structure moves. It's if it's a downtrend, right? So we understand that structure moves into premium once it's retracing back, okay, and then if we're to join the trend, we should wait for price to react from a POI within premium. So now let's say this whole structure was premium, okay? Let's say this whole structure was premium, and I want to pick a POI, and this is a supply zone, and then this is also a supply zone, okay? Which would I pick? Now, what I would want to understand is this: I would observe this zone if I have an inducement below this. I would want to wait for a change of character within this zone from, let's say, at least the 15 minutes time frame. Okay. And then if this gets broken, this becomes a break of structure and this becomes an inducement. Then the POI is being presented below this. I would really want to wait for price to react from this. Okay. Then return back to take out this high because I now understand that a strong high has been broken. So every swing high becomes liquidity. So if you would want to trade from this, trade from the imbalance within this zone. Watch the reaction from that because this becomes the inducement into this POI. Now this high becomes important, but not this because this has been broken. So this becomes an inducement. What I would expect from price is price to clear out these highs because buy stops are resting above them and pending orders are resting within the 50% of this. So sometimes you see price give an FU to this, then a change of character, they start going back down. So you might get stopped out, by price hitting your stop loss, but still go in your direction. So observe what happens above the high, not within it. But then you could still see a reaction from within it. Who knows? So it's better to mark this POI as your area of focus, okay? Not your POI because it's the 4-hour time frame. What you do is go to the lower time frame and wait for a more clear change of character. Now let me give you an example using this. Watch this. Let me look for a better example. Okay, so this was an uptrend, right? This was an uptrend. Okay, a 4-hour trend, right? Now you see we did get a stop hunt of this, right? Now, why did that happen? We had this inducement over here. We had this fair value gap, okay? But the stop hunt did happen. Now, the main reason why I would say this happened was because if you look at the structure over here, you would see this broke the high, right? So this was a break of structure over here on the lower time frame because clearly weak. But then once this was broken, this became a strong low and also a swing low. And now the swing low was broken right here. So this low becomes a risk. Okay? But then this low was the low which did the manipulation over here. But now you see relative equal lows, but still clear that liquidity. This becomes a POI. But I will watch the lower time frame of this, to see if I get a clean POI between the imbalance below it. Where's the imbalance? You see this, and then you see this. You see that, right? So this becomes a POI, which is being induced by this relative equal lows. Okay? So now, all you have to do is watch the reaction that comes from within the imbalance and the POI below this. This is also a POI, but do you see anything inducing this? No. Remember, I told you this is not an inducement for this. Okay? This is too far away. This is a 4-hour time frame. This gap is too far away. What I will do is watch the breaker block, which you see did get a candle close within it. So you see, the breaker block was what this was inducing, right? Which this became an inducement for this low, right? But once this low was broken, it made this a low probability, okay? So now when you're watching a POI, this is very tricky stuff. But this is how you know when your POI is being stop haunted or it's a break of structure. So once you're watching your POI, watch what you have around your POI. Do you see this your POI inducing anything below it? If it is, then you understand that there's a 50% chance that price might just manipulate this low before going back up. Okay, now look at this. Price did break this high, right? But when price came back down, price took out this low. Okay, once that happened, this low over here becomes high risk. All these lows, becomes high risk because now this structure is now broken. All right. Now, once that happens, I don't watch these lows anymore. What I do is I watch the imbalance within this. Okay. And then I watch the low between this to this. You see that? Because this swing lows now becomes liquidity. Structure moves like this. Okay. And once this is broken, this becomes liquidity. And price will do this. Take out this, return, take out this, return, and keep doing the same thing. And once this is broken, all this becomes liquidity. Okay, it will take this out, retrace, take this out, retrace, and then keep doing the same thing till it goes back up. So if you're looking for POI, this becomes a POI, okay, which is being induced by this. This becomes a POI, which is being induced by this. Not this low, the POI within this. Okay, so that's how it works. It just has to do with structure. Once this is broken, this becomes liquidity, inducing something below. This becomes liquidity as well, induces something below. This also becomes liquidity, induces something below. So once that structure is broken, the POI, the swing highs above it becomes liquidity. That's for a bullish structure, okay? But when a structure is broken to the downside, the swing lows below it becomes liquidity. Okay?
Okay. Okay.
Yeah. So backtest that on your own and see what you can find, all right?
Okay, thank you. Thanks, man.
Yeah. So moving to the next person, I'm going to pick T-Boy Mike. All right. So what's your question, bro? Hello, are you there? T-Boy Mike, you're now he couldn't speak, so the guy with the dot on his name. There's no name, just dot. You're now allowed to speak. Okay, is anybody there? Okay, sub us. I'm about to pick you. All right. Hello.
Hello, good evening, bro. I'm from
Yeah, good
Nepal.
evening. Yeah, welcome. Welcome to
So,
this section.
yeah, sorry, like before I raised my hand, but I didn't talk because I was busy.
Okay.
Okay, so I have a question. So like if if you see in the market, like sometimes our we see the swing low or swing high broken, but what if if there's no fair value gap inside of them, like if some swing high or swing low is broken, what if there's no swing, like a fair value gap there? Is that valid structure break, or like is that just a inducement or anything else?
If there's no fair value gap below a POI, it
Yeah,
becomes a high risk. Okay, I love to see the fair value gap because that's a confirmation for you to understand that money is still left within that gap. Okay, if there's no gap
yeah,
over here, this
yeah,
POI becomes high risk because if you look at how structure is formed, if this is completed and there's no gap, once price goes back down, there's no reason for price to react within this if there's no fair value gap around here.
okay,
Because now you understand that this goes back down, this goes back down. The fair value gap, which is built within this, gives this POI a high probability, okay? But if this is being filled,
Yeah.
right, and let's say this happens, that this has been filled means the money which was left within that POI has been grabbed. Let me give you an example. Look at this, which we had here. You see, the fair value gap was filled, right?
Yeah.
Did you see this POI holding? You see,
Yes.
it was stop hunt. It was a stop hunt below that POI because there was no gap anymore. There was no, liquidity resting above it anymore. So this becomes a trap. If there's no fair value gap, it becomes a trap. I don't trust that. It becomes a very, very high risk. And if you would want to risk your money on a POI that doesn't have a fair value gap, then you're doing that at your own risk. Because look at this again. This was the fair value gap, right? This was filled.
Okay.
What happened? This never hold anymore. So it's the confirmation for you to understand your POI. If there's no fair value gap, it becomes a trap. Look over here. This came up to the fair value gap. Okay, since this was filled, what happened? Sorry, that's not the gap. Let me do that again. Look at this. So you see this gap was filled. Did the imbalance, the supply zone above it hold? No.
Okay.
You see, so the fair value gap being filled is like a sign for you to leave because they took out their, mitigation from this. So it becomes high risk.
Yeah, but like if you saw in stocks, we saw the structure below is broken with the fair value gap, but why didn't respect it? Why didn't go it base? Why like
This
went up?
was a stop hunt, and this was a break of structure. Okay?
Okay.
This went back up. This was also a break of structure. This was still a structure which was being respected. Okay, because looking at this, was this returning into premium or discount? Yes, it was. And where did it react from? Like I told you, the breaker block, right?
Yeah.
Which means this becomes an inducement, which is inducing something above it. Now, how many pips difference is this high from this? 17 pips, right? 16. Look at this, 35. Okay, so this was 16. So this becomes a POI. If I was to pick this POI, I would mark from this because it's the closest to the inducement. Price could literally react from this tap because this is the inducement. Okay, now this does it make more sense now? Being the fair value gap and this is the inducement below it, stop hunt, this becomes a POI. Okay, now let's say the higher time frame direction, was heading to go higher. Well, let's say this was a breakup block mitigation on the higher time frame. Okay, but then looking at this, there was no structure really being built below this. Right, there was no structure being built below this. So you can't really tell if there was a break of structure from here, and price going back up. But all we could see is that the gap has been filled. If price was supposed to react from this, if price was supposed to go lower, it would be more of like this. Unless only if there was a lower time frame, fair value gap from over here. Then you could give an attention to this. And if you do get stopped out, then you get stopped out. You don't really tell the market where it wants to go. That's where you have the higher time frame. Okay, so if if the intentions of the higher time frame hasn't been completed, I see no reason why price will react to that. Okay, now you see the weekly time frame, you see price was heading for this gap. Okay, so which means this was an inducement. Like I said, it literally means this was coming from a breaker block. So you see this was an inducement. All right, so this is why the higher time frame is important. So if this was an inducement and you see the gap has been filled below it, you should understand that the weekly is heading for this. Now look at this. This filled a little bit of the gap, but did not fill it completely. Right? There's still a little gap left there. So once that is being made, this is still a valid POI. This is still a valid POI to watch because now you understand that this is inducing it. Okay. So now once the gap is being left, you understand that there's money and there's a high chance the price could give a reaction from that POI. But if there's no gap, I see reason why you should pick it. Okay.
So if price not like tapped into that fair value gap and like it came downside, so this is for inducement, like this is inducement for the future. If price will
If
come
price
like
comes into the fair value gap but does not fill the POI.
okay.
Okay. All right. So let me move over to the next person. Okay.
Okay.
You're welcome, bro.
Thank you.
I'm going to be picking let's see, Victor. Victor. Okay, no, sorry, his hand is down. Let's say Friday. Friday, I'm unmuting you now, so you could speak. Okay, so he did not say anything. Okay, moving over to testimony. I'm allowing to speak right now. You could unmute your microphone now. Testimony, you can speak now.
Okay. Good afternoon to you all.
Good afternoon, bro.
How you actually do backtesting? How you do the backtesting? Because I've followed a lot of training material, watched videos, studied materials, but how to practically do the backtesting on a trading view is what I want you to kindly explain to us. Thank you.
Okay, so how do you do backtesting? That is easy, and what I would say you should do. What I would say you should do is, if you're planning to backtest your trade, there are different ways you could do that. Actually, you could do that on the live chat. You could do that by using the replay tool, or you could do that by watching the live trade, which is the most recommended. If I was to recommend a backtesting for someone, I would say um, do the live testing and the replay. Let me show you something. If this was a daily, I don't have premium, so I can't use the lower time frame. If I wanted to backtest something, let's say let me just say it's my weekend and I want to trade alone. So now I want to backtest this. What I do is understand the direction of the trend, break of structure, manipulation over here. Where is price coming from? Inducement. Clear that inducement. POI. Okay, so what's happening over here? I see break of structure over here, right? So this is the inducement. What would I want to see? When you put that on play mode, what happens?
Okay.
Now you see now this was cleared out. Why was this cleared out? You do your research, go to the lower time frame, see why this did not hold. Was the inducement too far from the POI? Or was what caused this low to break? Was the low a weak low or something? Where did price react from? Price reacted from this, right? Okay, so it didn't tap into this. So what is this? Is this a POI or is it not a POI? How do you know that? You backtest it. You just wait to see if price reacted from that. No,
Okay.
that failed. So why did that fail? You go to the lower time frame and understand why. Okay?
Okay.
If this low holds, why did this low hold? You have a break of structure here. Where did price react from? Went back up, came back to premium, to discount, sorry, took out all this low and went back up. So this is just what is backtesting. This is just backtesting. Okay, you're trying to find what you were told in the books on the live charts and all. All right, so moving to the next question. Hope this helps, right?
Yes, sir. Yes, sir. Thank you very much.
Okay, you're welcome. Now moving to the next person. If you want to speak, please raise up your hand so I could see you. Chat Hura. Chatful, I'm about to let you speak right now, okay? Okay. Chatful, you're up. Hello, is he there?
Hello, friend. Good evening.
Yeah, good evening, bro.
Uh,
So what's your question today?
I am from Sri Lanka, friend.
Okay, okay. Thank you. Welcome. Welcome to our live section.
Yes, I am learning. First time I join your meeting.
Okay, you're welcome. Okay. Do you have any question? Okay, so I think he just came to do a greeting or something. So let's move on to the next person. Josh FX, I'm about to pick you. Are you available? You're allowed to speak. Josh, you're allowed to speak. You can speak now. Okay, moving over to the next person. Um, let's say Mukash. Mukash, right? I hope I pronounced him right. Mukash, you're allowed to speak. You can speak now. Okay, so let's move over to the next person. If you want to speak, raise up your hand and I will pick you randomly, okay? If you want to ask a question, please, a question. Okay, if you have a question, raise up your hand and we would pick you. KBSMC, I'm about to pick you now, okay? KB, you're allowed to speak. You can speak now.
Okay, thank you. I just enjoy your classes. All right. So I have a question. How will I know if a POI is going to be mitigated at the base of the block, or is going to reach the 50% of the other block?
Well, if the opening has mitigated, pay
If the
attention to
opening
the
has been
50%.
mitigated, so how will I know
If
if
the
it's still going to reach into the 50% of the other block?
So mostly this is what happens. If I was to pick this POI, let's say price was right here. Okay. So if I was to pick this POI, maybe because of this inducement over here, and I want to pick this POI, I won't be picking the opening anymore because you could see this week over here. So has already mitigated the opening of that. So I would only pay attention to the 50% of this. Okay. Or pay attention to
Okay.
the 50% of this. So if the opening has been mitigated, pay attention to the 50%. If it hasn't been mitigated, pay attention to the full week. This has also been mitigated. If I want to pay attention, or if I was to pick a POI from this, it would be just the 50% of this. So only when the opening has been mitigated will I pay attention to the 50%. And if there's a liquidity below it, okay, like now we have this guy right here, opening wasn't mitigated, so the full order block is still a POI, right? So you can see from here, they gave a reaction to the opening, right? Once that was mitigated, price went back up a little bit, took out the opening POI. So in the lower time frame, I can't do that because this would get. I'm not using premium, so let's just use it like this. So when you see the full order block on the 50%, you see this hidden base right here. Okay, so this becomes a POI on its own. You see that, right?
Yeah, I can see that.
Okay, so you see this becomes a POI, and you got a reaction. The opening was not mitigated. You see, we also still got a reaction. Reacted to the 50% and reacted to the opening, then broke structure. Now this guy already mitigated the opening, right? What did price do? Reacted from the 50%. You see that, right? So now this guy, same thing, but the opening over here hasn't been mitigated. You see? So this becomes a POI, which is being induced. This was inducing the POI, and you got a reaction. Okay? So if the opening has been mitigated, pay attention to the 50%. If it hasn't, pay attention to the full order block itself. Okay? Now, if you go back to the daily and look at it, you would see this mitigated the opening, and this got the reaction. This has already been mitigated, and the 50% got the reaction. This was the 50%, also got its own reaction at the lower time frame, right? So you see, once the opening has been mitigated, pay attention to the 50%.
Okay, the tool you use now to get the 50% level, what's the tool called?
This Gainer box, this is the Gainer box, but I took out the entire label from it and left just the 0, 1, and 0.5. When you look for the tools, you can see it over here.
Okay, thanks for
This
that.
option.
Can you also share
So
your fib settings?
I don't really use fib, just the 50% of this. I just mostly pay attention to this 80, 79, and 87 Fibonacci level, but I don't really use fib. I don't really well. If you understand the premium and discount, and you understand the structure, I don't really see any new use for the field, because if you do this, okay, you would see if price would react from this, you would see an inducement below this and a fair value gap. So that becomes a POI. But what I do is when I measure my premium and discount, I have this knowledge that prices might react from the 50%, and if it doesn't do that and breaks that structure, then it's heading for the extreme. Everything within this is none of my business if they don't have an inducement. I see that as temporary movement until price gets to the extreme. Those are my own, observations. If price is returning into this range, I see either the 50% of this. Okay. Now let's say
Okay.
this was a full range, right? You could see this high to this low. Where did price react from? 50%. Okay, so it's either price is doing that or price is going to the extreme. Look at this range over here. Once there was a break of structure from here, price went back up. The 50%, after the inducement was cleared out, the reaction was represented. So that did not hold. What happens? Price goes to the POI at the extreme, which is this other block right here. Okay, did not really tap into that, but this would be my area of focus for a change of character. So if I'm paying attention to the 50%, if that doesn't hold, I go to the extreme. So does that answer your question?
Yeah, it answers my question. Thanks.
Okay, you're welcome. So I'm muting you now. Let's say 2 more questions and we will be done with this section, okay? Josh FX, I'm picking you again, okay? Just go ahead. You're live. You could unmute your microphone now. Josh FX.
All right. Thank you. Good afternoon.
Good
Actually,
afternoon,
I've
bro.
been following. The major problem I think I really faced with after studying PDF and the rest was really talking about the trend, because we know that according to you, before you take an order block, you must really look for it to grab liquidity, have a fair value gap, and those other things you give. But the major thing is that sometimes since then I've been trying to trade. Sometimes I'll get in on entries with it, and the market will just tap on it and break through it. Tap on it, give me a fake out like it wants to go down to my direction or wants to go up to my, and the next thing they just break past it. I don't really know what the problem is.
Well, if price breaks through your POI, it's probably because, let's say, the higher time frame still wants to go higher. Okay, so if this, let's say this was the structure, okay, if you had a POI, if this was, the range, and you had a
Okay.
POI over here, and price came back up and took out your POI, mitigated the POI, returned a little bit, and then took that out, it's clearly because price wasn't ready to, go down from that high. Okay?
Yeah.
So if that is happening, that's basically because, that POI isn't what price wants to react to. Maybe price is still looking for a more premium POI to react to. But then how do you know if that is going to hold or not, right?
Yeah.
So what you do is watch the structure. If price is reacting from your POI on the lower time frame, let's say this was your higher time frame structure, and then price comes into this into your POI, right?
Yeah.
And then gives a change of character over here. Then you have your inducement, you have your POI over here. Okay, so now you look for a mitigation from here. Price taps into this and goes back down. If you see this happening and price fails to clear out this low, which is your first target, okay,
Okay.
and price comes back up from here to take out this high, this becomes a change of character. You see that, right? And then if you see
Yeah.
this happening, means this is an adjustment as well. You get what I'm trying to say? So when you pick a point of interest, pay attention to the lower time frame of that point of interest. Now, if this happens, you understand that there's a high probability that price could do this and go higher. This is the only way you could know if your POI is going to hold or not. Okay?
I see.
So if you
Yeah.
watch the lower time frame structure and then you see a break of structure of this low, let's say price came into your POI. Let me delete this as well. So let's say this happened and price came back down. So this becomes a break of structure, right? Once there's a break of structure, what happens? Price returns into premium and discount of that range, premium or discount of this range, right? So the best you could do is break even from here and take some percentage off from here. Okay, break even and take some percentage because now there's a high probability that price could do this, clear out these highs, and continue to go back down, or price could come back, to the extreme, mitigate this, probably stop you out on break even, but then do this, break up structure, right?
Yeah.
Then go back down. So if you get stopped out, you could look for another entry from here. But then you took percentage off this trade. But then if that doesn't happen, and you see this happening, price comes back down, goes up again, within your POI from this, and you see, let's say something like this, this becomes an inducement, a stop hunt, and a break of structure from your POI. So if you did pay attention to the lower time frame, instead of looking for, you know, this high to hold, you might take profit from this if you're still on profit or close on maybe zero point 0.1, or anything like that, and look for an entry from here. Because you should understand that structure, works like this. From the 15 minutes to the 30 minutes to the 1 hour to the, it keeps going higher and higher. And then if you're coming back inside, it's from the daily, 4 hour, 1 hour, 30 minutes and all. So if price is going to change structure or trend, it has to be coming from the lower time frame, right? If price is
Okay.
going to a direction, it's going to the higher time frame. If it's about to change direction, it will change from the lower time frame. So if the lower time frame is showing you that there's a change of character from over here, you understand the price still wants to go higher. So if this is your higher time frame, and then let's say this was a POI, and you see this happening in the lower time frame of your POI, you should understand the price is likely to do this, stop you out, which is this mitigation, and then maybe goes in your direction again. Okay, that's if this happens. You see?
Okay. Yeah.
So this might still get stopped hunt, and then a break of structure again, and then the whole cycle repeats itself. Okay, so you have to observe your lower time frame structure when price is within your POI. That becomes your area of interest. Once price is within your POI, pay attention to the lower time frame structure. But if it's not in your POI, pay attention to the higher time frame structure for the direction. Okay,
All right. Thank you.
you're welcome. So moving over to the next person, the last among you all. So let me see who would be. Um, let's say blessings. Are you there? If you, I would unmute you and then we'll expect you to speak. If you don't, I'll move over to the next person. Okay? You are allowed to speak now. You could speak if you want.
Hello, can you get me?
Yeah, I can hear you, bro. Welcome.
Yeah, first of all, I just want to appreciate you give out a lot of good content. Yeah, so my first question is I want to ask about the aspect of time and price, like London and New York, like how strictly are you supposed to follow them? Because sometimes I find something happening like before, maybe an hour before London. Is it okay to still take it or not? Yeah.
Okay, so which section is more, you know, is it more clear, or which section are you supposed to trade more, or how do you follow the sections? All right, something like that, right?
Yeah.
Okay, so let me give my key rules on how I use the sections. Okay,
Okay.
so we understand that Asian section is an accumulation stage, right?
Mm-hmm.
So London section is the manipulation, where you see the Judas swing, the fake direction and all, which takes out the Asian high, the Asian low, and stuff like that. So this is London section. New York section is like a distribution phase where price, moves in the original direction which it wants to move in. So this is Asian section, London section, and New York section. Okay. Now, if you want to trade in London section, you should understand that London opening is going to be a manipulation phase because price would move into the fake direction, like ICT said, Judas swing, right? And then stop you out and stuff like that. But then this is what I understand. This is how I use my structure. The Asian section builds liquidity for the London, and the London section builds liquidity for the New York section. Okay, so if price if price is moving like this, let's say on the Asian section, okay, goes down again. This is a downtrend, right? So now its price is likely to return if there was a POY over here. Let's say we had a POY right here, and then this high is an Asian section high. This high is basically inducing this POI. Okay, so if I would want to trade this, I would observe London opening. So let's say London opened from this. Then London opening comes in, and you see a spike up, which breaks structure, right? This is still the Asian low. Where is London moving to? What is London doing? London clears out the high, clears out liquidity from this trend line, like trend line and support and resistance and all. Okay, so what happens is price comes back down. Let's say we see price coming back down in London section, right? I won't trust this low to hold because I understand that London is the manipulation phase. So I won't trust this to hold, even if I see liquidity being built over here. London is like, the destroying phase where price, manipulates both the highs and the lows and stuff like that. So you could likely see something like this. Okay? And this now becomes, a liquidity hunt here, and then you still have the Asian high above this. And what did I say? London builds liquidity, for New York, right? So price starts to return into this, and New York opens from this. I won't trust this high to hold because New York opening is also going to be manipulated because that would be a stop hunt. That's why sometimes you see this traders marking London opening as liquidity or New York opening as liquidity. That's only because they had a POI, an area of focus above the London section. And once you understand the sections, this becomes a POI, and then price manipulates this high. Price manipulates this high like this. I won't mark this as a break of structure. I won't want to understand what the lower time frame is doing, okay? And then I would see if I get a change of character from this, and then I'll pick a trade from here because I understand that this was a manipulation. Okay, so if this happens, this low still becomes an area of focus because this is a new range, right? So what you want to see if its price takes out this low, but this would be my trade. Where would be your key focus for mitigation and POI? London opening, which was the key zone, right? Where was the next mitigation? London close, which was where you have to watch. This is why you see the key zones keep picking, the opening and the closing. Where is, the direction from the day? Asian high, liquidity, Asian low liquidity. So you see, the close of London and the opening of London is very, very important for you to understand which direction New York would be heading. Now you could see New York doing something like this, to take out the low. That this only happens when, let's say, the higher time frame is bearish. Okay, let's say originally this was supposed to be a downtrend. Okay, so you had a break of structure from this. So this is what you watch as an intraday trader. This is what you want to see as an intraday trader. But as a swing trader as well, what do you want to see? You want to see these highs, get stop hunt, and then a mitigation of this. That's what you want to see as a swing trader. But as an intraday trader, what do you want to see? You want to see what manipulation happens during London opening and London close, and where did New York opening mitigated, and where did New York close end. Okay, so Asian section is liquidity, but could be traded as well. But I don't pay attention to Asian section because that's my bedtime from here, so I will be sleeping by then. Okay, so once you understand that the two most important things you should understand that is Asian section is an accumulation phase, London section is a manipulation phase, and New York section is the distribution phase. So if you want to pick a trade in London section and you see your high getting stopped out, try to understand if this is a manipulation, a stop hunt, or a real break of structure. Okay, because that's your manipulation phase. My guys in the mentorship group knows that I rarely trade in London section because I understand that it's highly manipulative. So I mostly wait for New York or the Sydney section before I take a trade, because those are the most clean and easier section to trade from, mostly when you want to swing. But if you're scalping, you could see quick movements in the manipulation phase, which is the London section, because if price wants to do a manipulation, it has to be fast, right? So if you're looking for a quick 30 to 40 pips, you could just get that just from London opening or London close. Okay, but I'm a swing trader. Mostly I swing these days because of the stuff happening at home, so I don't really pay attention to the lower time frame structure. Okay, hopefully that helps, and you can test it yourself, and you could go through ICT videos on time and price, and that could help you as well. But this is how I use my sections. This is all I do using sections, so this is all I can tell you.
Thank you very much. I appreciate it. Thank you.
Okay, you're welcome. Okay, so this would be the last question for the day. I want to thank you all for joining the section, and I want to thank you all for being in the channel. If this section, I could see you all still raising up your hand, but I'm sorry, I have to go. It's already almost an hour, so we have had this section for an hour now. So if you have any other questions you would like to ask, maybe next we do something like this again, you could do that. Okay, and if this was educative to you, I would do a poll in the channel if we should do this more often, and then you could leave your vote over there and I would think about it. Okay, thank you all for joining again. I would be this is being recorded, so once I'm done I would send the recording to the YouTube channel so you guys could rewatch it if you want to get some knowledge from it. Okay, thank you all for joining. Do have a nice day.